Which fund would have made you more money if you put $10,000 into it? SCHD or FDVV? I've collected all of the data over the last 8 years for both and simulated this, and the results are very interesting. Both of these ETFs or exchange traded funds are very popular online, with strong reputations of paying dividends, making it hard to pick between the two. To compare them, we'll look at some key investing metrics, such as past and current performance, dividends, price appreciation, and a side-by-side comparison to see exactly what would have happened if you invested $10,000 into each of them 8 years ago. Let's take a look at our first competitor. This fund is owned by Fidelity, and this is their Fidelity High Dividend ETF. This fund is designed to reflect the performance of stocks of large and mid-capitalization dividend-paying companies that are expected to continue to pay and grow their dividends. Their management expense ratio sits around 0.15%, which is relatively low compared to some of the other ETFs on the market. They also pay a rather large dividend, which makes them an attractive option for dividend investors. Now, taking a look at their holdings, they focus on sectors such as technology, industrials, and consumer staples. The fund is relatively diversified, but they do have 25% in technology, which could allow for higher growth potential, but also the risk of market volatility. Overall, investors find this an attractive option as a dividend-paying ETF. Now let's compare this to our other competitor, SCHD. This fund is owned by Charles Schwab Asset Management, and this is their Schwab US Dividend Equity ETF. Their objective is to track the Dow Jones US Dividend 100 Index as close as possible. They have a strong dividend and strong growth potential. They do this by tracking dividend-paying companies, making them an attractive option for investors looking to generate this dividend income and have some price appreciation. Now, their management expense ratio is 0.06%, which is a little bit lower than today's competitor, FDVV. Their holdings are quite diversified. Their top sectors are in financials, healthcare, consumer staples, and so on. Since they have the fund so diversified, it makes it an appealing option for stability. Now that we have an understanding for each fund's objectives, I've gone through and collected all of the raw data, including the historical pricing and dividends since each fund's inception. Let's start off with Fidelity's FDVV. So they were brought onto the market in 2016. The price at this time was around $25.42. Using our $10,000 investment, this would have purchased 393 shares. And by the end of your first year, which was only about 3 months, they would have declared their first ever dividend, returning $105 on the investment. The shares would have also appreciated, bringing the first few months total up to $462 or 4.6%. Fast forward to the end of year 1 in 2017, shares would have also grown a decent bit up to a new price of $28.67. The total after 1 year of this investment would now have returned $1,830 or 18%. Now, as we move along to the halfway point here at the end of year 4, in 2020, you would have seen how this fund held up during the recession. The first thing to note here is that in Q1 of this year, the return was actually negative. The fund ended 2019 up approximately 43%, but in the next quarter there was a huge loss on the share value, bringing down the total return to -7%. However, by the end of 2020, they did recover, bringing your new total return up to $4,624 or 46%. Let's see how SCHD would have done in this exact same time frame. Since the Fidelity Fund was brought onto the market in 2016, I used this timeline for the start of SCHD's analysis as well. Now, by the end of year 1 in 2017, SCHD would have returned $2,491, which is 24.9%. The dividends at this time throughout the year would have made up about $350 of those profits. Now, by the end of year 4, we have had some significant growth, but the first thing we notice here is the impacts due to the recession. We can see that the fund ended 2019 up 49%, and then they took a hit down to 11% due to those recession impacts. However, there was a recovery, bringing the total returns back up to $7,306 or 73%. Let's do a side-by-side comparison here to see how things would have finished up between these two ETFs. Moving on to year 6 in 2022, the Fidelity Fund would now be up to $8,025, representing an 80% increase. There has been some growth in the dividends as well, with some payments reaching $150 per quarter. On the other hand, SCHD would have returned $11,800, representing 118% returns. Their dividends are also growing very quickly, with some payments reaching almost $200. Finally, at the end of our 8-year term, the Fidelity Fund would have returned a total of $16,062, representing a 160% return, compared to SCHD, which would have returned $16,488, representing a 164% return. So this is very close at the end of our 8-year period. Now let's use a few graphs to get a visual here on these performances, as well as a summary of our findings. So FDVV is in the green and SCHD is in the blue. Both of these funds have performed very well in the analysis. It's quite interesting to see the dip that happened in 2020 as the Fidelity Fund went negative at this point. Now it was trailing SCHD until 2023, when you can see that the fund actually caught up. It's quite interesting to see how these funds react to different times in the market, and this comes from their differences in their holdings. Both of these funds are dividend payers, and at the end of the 8 years, SCHD would have paid $4,695, while Fidelity's ETF would have paid $3,727. We can see at the end of this analysis, both funds have had a great record and both have their own benefits, but that's why these ETFs are so popular among dividend investors. Let me know what you think of both of these ETFs in the comments below. I'd be curious to hear your thoughts and opinions, as both of these have such great benefits. Now, it's always important to consider which one suits your portfolio and needs best, as well as the risk associated with each. If you did make it this far in the video, be sure to like and subscribe for more financial education related content.